Massive news for Intel stock investors, or potential massive news, shall I say. At the time of making this video, the stock is up around 7% or so. It was up close to 9% at the start of the day. Now, as you know, Intel has been, well, a complete disaster, especially for me personally. I own the stock, has been a complete disaster. Year to date, stock is down 56%. The last 3 months, it's down 28%, of course, after that horrendous earnings report. I mean, even if we go back 5 years, you would be down close to 50%. In the last 10 years, you would be down close to 19%. It's really horrendous what has gone on for Intel. Now, you might say, oh, it's because of Pat, right? Because the huge decline in stock happened when he took over. But no, Pat came in because everything that happened before, the stock might have gone up before, but they missed every single opportunity to be a big player today. To be a big player, big part of that AI revolution, data centers, all of that, everything that we see with AMD and NVIDIA could have happened with Intel if previous management did not focus only on dividend payouts, did not focus only on bonuses and share buybacks of shares that were quite expensive, by the way. So every time I see, oh, Pat has to go, no. Pat came in because of the issues of previous management. Turning this company around was never going to happen in a year or two. Their plan was a 5-year plan. We're now entering the later stages of that plan. Of course, pandemic, supply chain issues, things move extremely quickly. So yeah, things don't always go as planned. As I've previously said, I have no plans on adding to my position. I would like to see couple of quarters of, well, going into the right direction. Now, it can very well be that in the next couple of quarters, the stock has gone up by quite a lot. That's fine. I have a position, meaning I'll be down less than right now. But for me to add more cash on that position, I will need to see positive changes for the company. Now, more recently, one of the reasons why the stock is up is because potentially there might be some big changes coming up. Now, to me personally, I don't know how I feel about those things, so let's discuss all of that. If you enjoy this type of videos, like, subscribe, do all of that, hit the notification button as well so you don't miss any of the future videos. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Just an FYI for those of you that want to see the valuation metrics, right now forward PE sits at 58.9 times. Yes? Previously, you might have said, or we've said, yeah, it's not that expensive at around 25 times, right? Well, one horrendous report, guidance, etc., and you get to see this exact thing. All the rest, EV to EBITDA, price to sales, price to free cash flow. I mean, free cash flow is non-existent already for quite a while. Yes, price to sales, it's lower than their 5-year mean. But still, this is a company that, yeah, one quarter you might see something like this, and the next quarter you might see something like this here back in April of 2023, when suddenly, well, it was a good quarter and guidance was good as well. So the assumptions of things getting better, more profitable, then you get something like this types of reaction. But right now, I think we're going to stay at elevated levels. If we look at the average analyst price target, of course, a huge decrease since the last earnings report. Back then, we were at $38.6. We're now sitting at $27.6, representing around 27% upside from the price we're at today. So what has happened in the last couple of days? Well, first up, we've got some comment from the CEO, Pat Gelsinger. He said on Thursday that it's been a difficult few weeks since the chip maker's disastrous earnings report, and the company is working hard to address investors' concerns. We respect some of the skepticism we've received from the market. We believe we're up for the challenge. Gelsinger said on Thursday that the company continues to grapple with AI-driven weakness in its server business, but he expressed optimism about the future. We see the finish line in sight, he said. He added that the company would soon launch Lunar Lake, which he called the most compelling AI PC product ever. The company has engaged advisors, including Morgan Stanley, to help it fend off activist investors' scrutiny. Then on Thursday, we've got this announcement right here. Intel and IBM deliver enterprise AI in the cloud. Intel and IBM to deploy Gaudi 3 AI accelerators on IBM Cloud to help enterprises scale AI. So what's new here? IBM and Intel announced a global collaboration to deploy Intel Gaudi 3 AI accelerators as a service on IBM Cloud. This offering, which is expected to be available in early 2025, aims to help more cost-effectively scale enterprise AI and drive innovation underpinned with security and resiliency. This collaboration will also enable support for Gaudi 3 within IBM's Watson X AI and data platform. IBM Cloud is the first CSP or cloud service provider to adopt Gaudi 3, and the offering will be available for both hybrid and on-prem environment. Now, this is a thing. IBM is the first one, and right now probably the only one that we know of, to adopt Gaudi 3. We know that Gaudi 1 and Gaudi 2 was not really that successful, right? So let's hope that this is the start of something great or something better than before. Hopefully get more of those announcements. Then the bigger news is this. So this comes from a couple of analysts. I'm told that one of the main reasons for Lip-Bu Bhutan's departure from Intel's board of directors is to join the spin-off committee. This move is to ensure that he can help Intel plan the potential spin-off of chip design and foundry operation from a neutral and objective standpoint. There have long been rumors that Intel may spin off its chip design and foundry businesses. While no decision has been made, this is the closest moment Intel has come to a spin-off. Then we've got Patrick Moorhead here commenting and saying this. The only benefit to splitting IFS or Intel Foundry Service off now could be a slight increase in the probability that IFS gets more customers who don't trust the Intel design side like AMD and Qualcomm. Yeah, this is something we've discussed previously, right? Because if it stays inside of Intel and then you're trying to attract your competitors, who says that they are going to trust you, right? Doing this, a complete spin-off, could definitely convince them. He continues by saying, I believe if 18A is any good, AMD would have to adopt it if Samsung doesn't pull through. If AMD really wants to grow like it wants to, it needs a second source. As for Qualcomm, they go with the best tech, so maybe 14A. Remember, the company went with Samsung for a few cycles. IFS would need to be a real split, not some tracking stock split. And so, what could happen? What's the impact on us shareholders? So you've got one, a public spin-off. So shareholders receive shares in the new independent company, potential for increased focus, enhanced valuation, and strategic flexibility. And third, risks include increased complexity, potential overvaluation, and operational challenges. If they take it private, meaning they spin it off, they split, but it's not going to be a public company, but a private one, then shareholders will receive cash payments. There's going to be a potential for immediate liquidity and premium valuation, and the risk include loss of liquidity as well and uncertainty about future value. Loss of liquidity meaning you're not in the public markets anymore, so it's a bit more difficult. But then again, you can IPO in a couple of years, and of course, things do get better from there. Other scenarios are joint ventures or partnerships, so Intel could partner with another company to share the risk and rewards of the foundry business. The other one is continued ownership. Intel could choose to retain ownership of the foundry business, but with a separate management structure or operational focus, which I think is what happens with SoFi and Galileo. Since Galileo is a platform that has SoFi competitors on them, Galileo has its own CEO, SoFi has its own CEO, so there is no conflict of interest, or at least there is not going to be questions about, oh, it's the same CEO as SoFi, so it's probably going to benefit SoFi more than us competitors, which are clients of Galileo. No, you want to have a separate management team, separate leadership it helps the overall business, right? Because if you make sure that your platform offers the best and the best, then more and more folks will come in, even if it's your competitors, right? You will also be able to use those services, but you need to offer the best of the best if you want to attract more and more companies to use your services. Now, to me personally, I'm invested in Intel because I still think that the foundry, let's say, turnaround can be a success. I'm not saying that they're going to be bigger than TSMC, but being the number 2 player, that's their goal by 2030, I think is already a huge, huge achievement. And from my shares perspective, I think the value of my shares will be worth much more, right? Right now, Intel is worth under $100 billion. That's quite crazy, right? So we'll see what happens. Right now, this is just rumors, reports. But yeah, if it's official, then of course, I'd like to see what happens with that spin-off, complete one. Not complete, it's like Mobileye, not like Mobileye. Let's see how those things work out. But yeah, Difficult times, not easy at all at Intel. I think they underestimated the job that they were trying to achieve, in my opinion. Yeah, it's still a huge company. It's still very important geopolitically, security wise as well. So I don't think Intel will go down. I think they'll get help by government, but of course, government gives them money. But on the flip side, they have to lay off 50,000 people, and management still makes millions and millions of dollars each and every year. Yeah, that just doesn't sit right with me. And that's something I've said in the past as well. So let's see what happens with that. Let's have a quick look at the graph. So right now on the weekly, we did have a rebound from the last couple of weeks under $20 or so. We were previously more oversold than today. Today we're barely oversold, not just out of the woods yet. But yeah, it seems that we did bottom here at the start of August. We've made our way back up to around, well, close to that 20-day moving average, which sits at $21.59. The 50-day one sits at $21.60, and the 200-day one sits a bit closer to $33. Now, right now, like I said, RSI is still a little bit oversold on the weekly. So overall, that's about it. I think we are going to see quite a lot of changes for Intel. Of course, if they spin off the foundry business, right, then the losses of the foundry business will not be reflected anymore for Intel's business. So you can focus solely on what they're good at, with probably a better margin profile, a better profitability profile as well. But on the other side, I mean, me personally, I bought Intel because, well, of course, there's the core Intel, but I really thought that the foundry business, that's where the major gains would be made in the next coming years. Now, if there is a complete spin-off, let's see what the terms are, then I will probably have to reevaluate that investment. Yes, I know, dead money for the last couple of years. I know, I admit it. Thank God it's not a giant position in my portfolio, so at least there is that. That's about it. That's my opinion on this matter. Of course, do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.